Hello nieces and nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. And looks like the S&P 500 continues to push a little higher up, guys. It's not as powerful. It's not as a powerful move to the upside as I like to see. You know, not much volatility, guys. Not much volatility. But overall, still pushing little by little, trying to melt his way up to the upside, okay? Overall, I still believe we're in the chop phase, which means the market is building strength for that next trend phase, okay, for that next directional move, either to the upside to new all-time highs or back to the downside. Okay, lately, guys, the volatility hasn't been that good. You look at the intraday price action on a smaller time frame, you know, this was Thursday, this was Friday, you know, this was Monday. This is so pathetic. And then today, intraday action has been underwhelming, okay? And it's not too surprising to see considering we are in the chop phase, okay? I know a lot of you guys don't like the chop phase, but remember, the market cannot chop forever. This is the contraction phase. That's another way to refer to the chop phase, the contraction phase. But after the contraction phase, remember, the expansion phase always comes next. That is the trend phase, okay? So until the trend phase returns, the best thing we can do is be prepared, know the levels and setups so we can trade it unbiasedly. Now we see that the market makers has set the range from us. After gapping up above the previous all-time high, SPY went to retest that area as a support, given or making 565 the new buy zone, bottom of the range. Before we even hit that 565 level as a support, before that on a Thursday, last Thursday, we set a new all-time high, okay? The all-time high close was at 570.98, which is why 571 was one of my level. That is technically the all-time high right there. But we're talking about, you know, the high, not where the close is, but the high. We reached a high of 572.88. Okay, so that's the difference when I'm talking about all-time high. There's the all-time highs high, which is Thursday's candle high at 572.88, and then there's the all-time highs close, which is the real all-time high, which is at 570.98. You can round it to 571. But either way, whatever you consider is all-time high, that 571 level did clear. Today we close at 571.30. In my opinion, that is a breakout, which puts 572.88 in play. Okay, that was the all-time high from last Thursday. If SPY can stay above 571, that level stays in play. And above 573, well, 572.88, I have other targets, of course, which is at 575, 576.5, new fib levels that I got here, using August 30th high down to September 6th low. And we got targets above there. But if we clear 572.88, it can round it to 573, 575, 576.5 in the big fib level. At 578 would be my target, okay? Overall, the chop phase ends bullishly if we can clear 572.88 or 573, because that's the level I'd be watching, okay? If the chop phase continues, then support must fail. Breaking down 571 would be a good start for the bears. And then we have support at 569.3-ish with 568. It was a buy zone down there. And then the big critical level at 565. That's the bottom of the chop range. Okay, so pretty much the chop range is 565 up to 573 with yeah, and then we have those levels in the middle that I'd be watching too, the pivot levels, okay? But overall, bullish plan for tomorrow, staying above 571 and clearing 573, or at least hitting it would be the bullish plan, and above that 575, 576.5 and 578 would be the targets. Okay, I wouldn't short unless we break down 571 and 569.3, break those levels down. Then I would favor we head back down to the downside, at least until 565-ish area. You guys know how the chop phase is, up and down with very little follow through. Okay, the longer it chops, it's gonna suck, I know, but eventually the volatility will return, and that's where, as traders, or especially day traders and even swing traders, that's where the money is made. Okay, you guys remember all the fun we had back in late August. Okay, we was chopping in late August. We had the chop phase. Once we broke down 555, volatility returned. We broke down 555. It gave us a beautiful move all the way down to 540. And then we had another chop when we had the inside candle. We had the preceding candle's high at 551.6. We broke that high. You guys can see that from September 6th high. We broke it out on September 11th. And then we went on a bullish rampage to new all-time highs, and now we're back in the chop phase. You guys see the chop phase to the trend phase, from the trend phase to the chop phase. Okay, when you understand this price action concept, it makes it a little more easier to trade, because you know if you should go heavy or not. You know if you should go light or not. You should know if you should be betting to the upside or betting to the downside, depending on what phase we are in. It makes trading easier. This is unbiased price action analysis, sheep style. Bah! And I love it. Okay, do we understand the plan for SPY? Okay, let's move on to Triple Q. Triple Q did manage to close a little higher. Like I said, we cleared that fib level at 482. I couldn't get bearish unless we broke it down, especially on the daily chart, and that did not happen. And we went and smashed the 78.6 fib level, which was at 46.5-ish. If bulls want more upside, that is the level that must clear. 46.5 to put 488, 490, and so on in play. If we're going to get bearish, I have support at 485, 43.5, and 482 as the critical fib level. Break those levels down. I would favor 478.7-ish to be retested, and below that would be very bearish, at least all the way down to 473 or lower. Did I say that too fast? Guys, listen to that again. Just listen to slow if I said it too fast. All right, let's move on to NVDA. Now, NVDA, we got the breakout of that little downtrend line that I had. Very bullish. I mentioned to everybody, I can't get bearish unless we break down 116. And if we break out 118, that's your bullish trigger. That's your bullish signal to enter calls. And look at that beautiful move, hitting the next fib level around 121.9-ish. I rounded up to 122. Didn't quite hit that level though. Overall, I would stay bullish above 118. Is because that's based on the breakout. As long as above 118, that's breakout mode. Clearing 122 would definitely be bullish follow through and send us on a trip, possibly to hit the uptrend of this line right here. The downtrend, excuse me, the downtrend of this line right here, which could send NVDA up to 127. It would need to clear 122, of course, and retest 127. And I would expect bears to try and step up over there. All right, but if the bulls fall short of testing that critical level, okay, bears defend 122 and start breaking down 120 or 118, I would switch back to bearish. Dead cat bounce setup, false breakout, whatever you want to call it. 116, 114, and 111 would all be back in play. Tesla. Now, we got to be careful with Tesla here, because tomorrow it can go either way. Okay, but I am confident that it's going to make a move. Hopefully, I am not wrong, because I have been wrong before. And if I'm wrong, I will admit it. But I am not giving you guys a prediction in direction. I am predicting that we are going to get some direction. Not saying up or down, but I am saying we should get a very, very nice move that's going to be tradable. And for me, the best thing I can do is give you guys the level. So whatever way the market goes, up or down, you'll know which way to bet to. Okay, now here's the context on Tesla. Big body green candle followed by a gap up doji candle. Usually evening star patterns, which is bearish reversal patterns, start off with these two candles. Start off with a big body green candle followed by a gap up into a doji candle. If this is going to end up bearishly, the third candle usually starts off with a gap down and ends up being a big body red candle. So if the evening star pattern plays out, this could be a top forming, and tomorrow could be a very bearish day. And we'll know it's going to be a bearish day based on the setups. I have support at 254 and 252 first. If those levels fail, look to short. Now, if we gap down and gap below those levels, right? Then the next level you need to watch is 249 based on the doji candle, because usually with evening star patterns, they break the low of the doji candle and then all hell breaks loose. Okay, so those are the levels to watch. 254, 252, look to short. Those levels fail with 249 as target, leave runners. Now below 249, it's going to get very, very nasty against the bulls and bears should be extremely happy. Okay, now that's if those levels fail. But if the price action says otherwise and it doesn't break down those support levels, then don't look to short. If the price action clears more resistant levels, starting with 255.5 and 257, then you look to long, because a lot of times with these big body green candles and then followed by a doji like this, the doji is just a cool off, and then the next day they go crazy again. Okay, so while it can either go up or down, the point of my content is to give you guys the pivot levels and the plan of action if pivot levels either break down or break out, so that you know what to do, what to enter, where to take profits, so you can go home with a green P&L. Because who gives a damn if the market goes up or down? All I care about is if it goes up or down and I can make some profits out of it. Okay, that's the point. IWM is next, and I've been bearish on IWM since it broke down that 221.8 level with 219.7 as a target. Today it finally hit that level, but it did at the end of the day close a little higher than yesterday. Is this a dead cat bounce? If it is a dead cat bounce, then 219.7 must fail. And look at that, the RSI is far from oversold conditions. So the IWM definitely would have strength and energy to do it if it wants to, if that is the market maker's plan. 219.7 must fail if this is a dead cat bounce, and a dead cat bounce is bearish, guys, with 218, 216.7 in play. Look to short if 219.7 fails. If it gap below it, then you refer to the next support at 218 and 216.7, and you play those levels, okay, based on the setup. Now, for me to take the bounce serious, because we did officially tested it and we filled the gap and all that happy stuff. For me to trust it, you guys already know what I'm going to say. We need to recapture some lost levels, starting with 221.8. So if this is a serious bounce and if it's strong, then 221.8 must recapture, and I would look to long with 223, 224.5, 226, and 228 as upside targets. All right, guys. You guys having fun? Please hit the like button. Please subscribe if you didn't, okay? And if you want more content from Uncle Charters, join my Discord. But the fun's not over yet, okay? Because we're going to check out the dark pool orders for SPY and Company. 569.5 is where majority of the dark pool levels came in, okay? I actually have a level around there too, 569.3-ish, a few cents off. But look at that. The rest, 27% and 20% came in at that 571-ish level. That was the previous all-time high. Well, guess what? We got to do all-time high again. But the big money plays definitely came in over billions in premium. 1.2 billion and 900 million combined. That's about 2 bill right there, right around the same area. Okay, guys. And somebody did come in, but it was over 500 million. It didn't quite hit a billion, but 571.3, someone came in at the end of the day. So if this is big money trying to set a resistant level here, then they need to break down 569.5, or you can refer to my 569.3 level to push us downwards, okay? Otherwise, using these dark pool levels and knowing where the big monies are parking their money, yeah, I would be bullish above these levels with new all-time highs in play. All right, guys, let's take a look at triple Q. 51% of activity came in at 483. 39% came in at 45.29. But none of them broke a billion in premium. I like to see it break a billion in premium to really take it serious. These barely broke a quarter of a bill. So Uncle's not impressed. NVDA 120.8. 97% of activity came in at 120.8. That's a good amount. And I'm usually like, I always like to see where indices breaking a bill, and I think like, okay, that's normal because it's an indice. With stocks, they usually don't break a bill, and getting above 100 mil is impressive. But with NVDA, I mean, 1.5 billion, like somebody and their mama is really like into NVDA. But guess what? We know where they're entering and exiting, okay? Because remember, for someone to buy, someone has to sell. Some big money players said, I am going to buy some NVDA at 120.87. And some other big money players said, hey, I am going to sell some NVDA at 120.87. Okay, we don't know what their intentions are. The person that sells probably holding a lot of NVDA. They just wanted to take some profits for all we know. And the other person could be catching FOMO. We don't know. But what we do know is where they're getting busy at, 120.87. Okay, so when we look at the charts, we can add that level as a level that we'd watch. And guess what? 120.87 is also where NVDA look, where it closed. So when we look at something like this, it's like, okay, so these came in up to 24 hours. So clearly, big money players is doing it for a reason, and the market makers, these come in up to 24 hours ahead, you know. So they're trying to like hit you see the market makers trying to hit these orders, okay? But the question is why, all right? And where do we get our answers? From the darn price action. And what's the price action saying right now? It's saying it's bullish, okay? We just need to clear 122 for bullish follow through, all right? But if we use that level as a pivot, then obviously it needs to break back down as support for me to be bearish. Does that make sense, guys? Does that make sense? Above it, bullish. Below it, bearish. Tesla, okay, so 254.27. So see, Tesla, it didn't break a bill, but 134 million premium for a stock, that's pretty good. 254.27 is where 85% of activity came in. Okay, guys, add that level to your chart. All right, and did I get IWM? So 796 million in premium at the 220.63 level. Okay, 220.63 level. Yeah, bulls are gonna need to stay above that level if they want more upside. All right, let's take a look at the flows. Let's get to SPY like we usually do. You guys should know my filters by now, but for the new viewers, this is I put it for premium, 100K premiums or above. I'm only looking at above the ask, and because I want to see the most aggressive plays. I'm looking for sweeps and out the money. Okay, and once again, it is overall bearish. Okay, 3.2 million compared to 2.8 million. Now here's what we need to do. We need to look at the context to make sure they're not, expired contracts, or look at the dates. All right, and also notice 3.2 mil compared to 2.8 mil. Now, if you guys watch my previous videos, you guys may have seen, or may have seen in other YouTubers' video, it's been pretty lopsided, with majority of money going into puts way more than calls. But you guys can see it's not as lopsided. So the calls are starting to come in. So what does that mean? Could a top be approaching? Could people be catching FOMO? Because I tell you this, if more people are catching FOMO, that is a pretty good sign that a top is coming. I'm not calling a top now. I'm just saying based on the previous behaviors. When retail start catching FOMO, that's when market makers tend to flip the script. Okay, but let's take a look at the flows. I mean, this is September 25th. This is a put for tomorrow, 569. I mean, not very aggressive. This is aggressive, 540. 542, 560, okay, for November 15th. And as far as the calls go, this is September 25th, excuse me. So tomorrow, September 24th, already expired. These are aggressive. See, these are what's starting to come in more. We wasn't seeing much of these a few weeks ago. And now we're starting to see more of these coming as the market is rising to new all-time highs, okay? Are these FOMO buyers? I don't know. But that's aggressive. 2.4 million in premium, October 18th for 575. Strike price, somebody's here is favoring more upside, okay? But you guys can see there's still, despite the market going up, there's still lots more money going into puts. And I'm thinking, guys, as long as there's still more money going into puts, I think the market makers might try to push it up more. So we're going to keep tracking this to see if it changes in the coming weeks, and will it match with the price action. Because remember, this can be educational as well. Okay, let's see what happens. Think like a scientist, guys. Triple Q, beautiful. 1.1 mil into puts, 1.5 mil into calls. Okay, so definitely edge goes to calls. Not much, just a little bit. As far as the money goes. But let's take a look at the context. Look at these: September 27th and September 25th. This is gonna expire tomorrow. 44 strike price, okay. And then this is September 25th for calls. September 24th expired. Don't want to count that. September. So it's pretty mixed right now, okay. It's pretty mixed with the slight edge to calls, okay, guys. But you see the calls. 490 strike price. 484. They enter on 43.45. So yeah, they should be up right now. Okay, so yeah, pretty mixed. Nothing too decisive, nothing too helpful with that one, in my opinion. Oh goodness, IWM is just bearish, guys. Look at this. So this 2.3 million in premium. This is what I'm talking about. Very lopsided with IWM. 2.3 million in premium compared to $162,000 as far as my criteria goes. Okay, now why IWM has been bearish, we gotta pay attention to the price action because it did backtest and fill that gap. All right, and if we start clearing 221.8, you guys can't be saying, "Oh, but uncle, the flows was very bearish." Like, keep in mind, guys, if we can see these orders, so can the market makers. Now they're gonna do with it what they want to do, but if their plan is to cause maximum pain, do you really think they're gonna allow IWM to go lower? Okay, we gotta ask ourselves that. And if the answer is yes, then like I said, 219.7 and so on must fail. And then boom, we can be like, oh yeah, the option flows were correct after all, huh? All right. But if not, then we know, like, hey, damn, market makers, screw those guys over. Either way, for me, the most important thing, trade with the price action, okay? And I think that's the safest way. I like to look at these to get an idea of what majority of people's thinking, like the big money players thinking. You know, these people could be idiots for all we know. They're just idiots with a lot of money. You know what I mean? We don't know that. But I can just tell you, based on this data, it's more bearish, big money people putting in, you know. All right, so I do hope you guys find value in this. Yeah, we're still stuck in the chop phase, but it's all right. We know the levels, we know the setups, and we're going to trade it unbiasedly, level to levels with runners, sheep style. Peace.